Good morning, guys. Just want to make a quick video on the EU, obviously what went wrong and also why we took the gold trade. As you guys may notice, it's 6:04 a.m. currently where I am, but obviously it's 11:05 UK time. I am currently away in Bali, but that doesn't mean anything's going to change with how we run the Discord. I'm still going to be trading. I've spoke to all the prop firms who I trade with, and they're all happy. You're allowed to trade while traveling and whatnot. So yeah, nothing will change. Just sometimes the video timings may be a bit different to when they usually are. So Euro USD, what went wrong? So my main reason for going short was we had such bullishness on the daily time frame. Like I mentioned before, at the point of taking the trade, we had 1, 2, 3, 4, 5, 6, 7, 8. We had 8 daily bullish candles in a row. So I was just thinking to myself, okay, like price needs to retrace at some point. So I did go against the daily order flow, which obviously you guys can see, and ideally that isn't the best thing to do. And as we found out, as we seen today, going against the daily order flow is not the wisest thing to do, but also it's very hard to do. I shouldn't have took this trade as such, simply because it was Monday, last day of the month, and yeah, completely against the daily order flow, which is something I rarely do, and this is the reason why I rarely do it. Obviously, if we didn't have the 8 bullish candles in a row, it would have been perfect for longs. And obviously, in hindsight's a wonderful thing, isn't it? But in hindsight, afterwards, we had the stop run into the BPR, and then we trade higher. Once, like, if you were looking to buy, your first sign of buy-in would have been in New York session. If we closed above this inverse fair value gap, you could have entered there and had your stops at a strong low, and then obviously you would have had a nice trade there. Also, if you wanted to wait for more confirmation, you could wait for this set of down close candles on the 15-minute. We then got a retest with a fair value gap, which could have been a nice setup, stop loss near the strong low, and you would have been up to R. But obviously this is all hindsight, so we aren't hindsight traders here. I trade real time. I take losses with you guys, I take wins with you guys, and that's something I just want to make sure everyone understand. We're going to take losses together, we're going to take wins together, and whether we win or lose, we're always going to get videos like this where we review every trade. So the reasons behind why this wasn't a good trade: 1, last day of the month plus last week was big expansion, so probably should have avoided Monday. 2, against daily order flow. And 3, not so much why we shouldn't have took the trade, but once we closed here, I've spoke to you guys before about how when price struggles to get through a short-term lower high, once price struggles to get through a short-term lower high, that is a high chance that we're going to reverse / consolidate. Obviously, we took a short-term low, we struggled to get through it. I probably should have closed after this bullish candle. So on this bullish candle here, I should have closed, because this is what we don't want to see. If it was going to continue lower, we wanted to see this candle close with a big wick to the upside. So for those of you who are new and have joined, when we take out a short-term high or low, this will also refresh some of the memories of the guys already in here. So see how here we take it out, then we could just continue through it straight away. Same here, we take out a short-term high, obviously we wick lower, but then we just continue straight through it. Whereas here, we take out a short-term low, see how we wick, and then we start trading higher. So when you're in a trade, you want to see the continuation through them lows. Like here, we wanted to see a continuation, this to be a wick to the upside, then close below. So it was a trade mismanagement by me as well, but that's why I always preach that you guys have appropriate risk, because I'm human, I'm not perfect. I still do stupid mistakes like I did yesterday, taking trades against daily order flow, not managing the trade properly when I was on the charts. Like there's no excuse, even though I'm in Bali. Like I was at the charts watching this, because obviously it was 10 p.m. at night where I am, so I was home, I was on my computer. So yeah, I just mismanaged it, and I'll admit to that. I'll stand up to it, and yeah, I just want to be honest with you guys. So make sure you guys do your journaling. If you did take this trade, you can put how we took a short-term low and didn't expand lower, and then start to go bullish as your sign to close the trade early, because that's a very, very valid sign. Plus the daily order flow is bullish, so there's also that this could be a stop run, and this confirms the stop run when we start to see the bullishness. So yeah, definitely a day for the journaling. And then going into London close, I seen the setup on gold. So obviously on the daily we had this stop run below this low here into this daily fair value gap, and we also have a small BPR here, which as you can see price is respecting currently. And then on the hourly we had a stop run at weekly open below Friday's low. So we had our first stop run there, and then obviously we displaced higher, making fair value gap, also creating an order block closing below this candle and these candles. So we're seeing two signs here of bullishness. We have order block plus fair value gaps. And then once, obviously I didn't want to trade London because pretty overextended during London, so pre-overextended during Asia, so you avoid London. So then going into New York, which was 12 o'clock here, we did have a stop run into this 1 hour fair value gap. And then as we started to trade away, I didn't want to enter down here straight away, because obviously we're at a key level where price could start retracing / trading higher from. So I just wanted to be a bit more cautious, and at this point we was in the EU trade, so I didn't want to have 2% risk open on the table. But once we started to trade higher, essentially closing above this down close candle, and also how we traded above this set of down close candles, we retraced into this fair value gap, then also managed to trade higher again. I was happy with taking a trade. If we were just to trade up here, take these bodies out, and then just continue lower, I wouldn't have took a trade. But because we essentially had a stop run, traded higher, retraced, and then started to trade higher again, I was happy to take the trade. And why did I put my stop loss below here? So obviously this is a strong low, because we took, say, this wick here and this weak low here on the 15-minute. Looks a lot cleaner for a stop run. As you can see, perfect stop run, which is what you want to see. So my stop loss was here simply because the chance of we could run this low again into this fair value gap plus this breaker block here. So I accounted for potentially just a wick into that and then trade higher. But obviously, as you see, which was nice, we're trading higher, creating fair value gaps, which is what we want to see, especially if we're bullish. Obviously, now we are in this bearish fair value gap. If we can get a closure above this and inverse it to go higher, that would be perfect. Because right now, this could just be a retracement into premium to continue the sell-off. So that is something I want you guys to be aware of. But right now the trade's looking good. Not moving stop loss or anything yet. Obviously we have took out this short-term high here, but I like how, well, this is even another good example. Apologies if you're hearing some noise right now. This is another good example how when you take a short-term high or low, you want to see price continue through it. You see how even here we had a bearish candle, we've got a little wick, and then the next candle followed through and continued higher. That's what you want to see when taking out short-term high lows. not what we seen on EU here. Hardly a fair value gap, and then just continues higher. But yeah, this is my trade for what we're currently got on right now. It will be, if it's a winner, 3.27. So that would, if with this trade does become a winner, that will put us up 2.27 for the week, which would be a nice start to July. Obviously because the new month has started. So yeah, but I just want you guys to understand the fact that even though I took a loss yesterday, in the past I would have absolutely fucked my account yesterday. I was so annoyed when I took that loss. I was sat at my desk thinking, like, what am I doing? Like, it was such an easy loss to avoid, and I was so annoyed with myself. And in the past, I would have fucked up. I would have lost my accounts. I would have revenge traded and everything. Like, my girlfriend was asleep. It was only me up. I was at my computer by myself yesterday, and the urge to do something and just get in another trade, just to get the feeling of being annoyed out the way and being in a trade to try and make up for it. I wanted to do that so bad. Like, just basically crash out and fuck my account. Like, the urge from losing that trade was there so badly. But that's the difference between me and some of you guys in this chat. Some of you guys would have crashed out and fucked your accounts, and then coming into today, you wouldn't have an account to trade on. Whereas I managed to force myself not to do anything stupid, and here we are today. I didn't miss out on anything. I'm in another trade. I've still got my accounts. I'm only 1% down. So I want you guys to understand the difference between me being super profitable, which I am, and you guys not being profitable, is the fact that I can handle myself after the losses. And I'm not saying I don't feel the emotions like you guys will do, because as I just described, I felt all the emotions of a retail trader. Well, not a retail trader, because we're all retail traders, but I felt the emotions of a newbie trading yesterday after the loss. But the only difference is I know how to control them. And all I done was, once I had these feelings, I closed the charts, I left both of my phones inside, and I just went and sat outside for 30 minutes. That's all I done. Like, there's no special thing I done. I literally just close the charts, leave my phones inside, so don't look anything, and just sit there and think, why am I feeling like this? I'm feeling like this because I was annoyed because it was such an easy loss to avoid. But I just want you guys to understand that I still get these thoughts and feelings. I just know how to control them better than you. And that's how everyone who you see is profitable in the trading industry, that's all the differences between you and them. They know how to control themselves after a loss. Because we win this trade today, we're up 2%, and that loss doesn't mean shit if we win this trade. Even if we lose this trade, the losses don't mean shit because we are following the rules. Rules over emotions every day of the week, guys. But yeah, any questions, let me know.